Exactly. Welcome back to another edition of Blueprints and Bankrolls. I'm your lovely host, and not the co-host like Brandon, of this podcast. Welcome, Brandon, and good morning.
Good morning. I'm Brandon Delgado with Steadfast Design Builders. Jared is just angry that he's a co-host on here.
Life is great.
Calm down, calm down. It's for the fans, man. It's for the
Sorry,
fans.
this isn't about us, Brandon, okay? Let's not talk about your hair. Anyways, today we're going to talk about Mythbusters. Mythbusters being, hey, people believe this. Perception is not always reality. We want to talk and dispel some myths. So we're going to call it, ready? Mythbusters. I don't have a lisp. It's fun to say. For all of you that do have a lisp, I do apologize in advance. Actually, I don't. So I'm sorry that you're dealing with these challenges. But we all have challenges, Brendan. So let's talk about challenges with myth. See, here we go again.
Myths. Okay, I got one. I heard that
What do you got?
on the news that there might be 2 rate cuts of the Fed this year. Like, what does that mean to me? And should I wait on getting pre-qualified, or what does that look like?
Great question. Well, if you're looking to buy a house that you've been waiting on the fences for rates to drop, yes, they are projected. It's likely. It hasn't happened. There's chatter. The Feds, when they come out, the next meeting is September 21st. They're going to chat about possibly lowering what's called the Fed funds rate. A lot of people think, oh, they lowered rates by 1/4% or 0.5%. That doesn't indirectly affect mortgage rates. What that's going to affect is car loans, credit cards, savings and loans type interest rates, things like that. You're not going to have for what's called non-secured debt, credit cards, things like that. So your interest rate on your credit cards are going to go down, which is a great thing because credit card debt is pretty much at a 30-year high. The other cool thing though is nationally, the amount of equity that people have is also at an all-time high. There are trillions of dollars in value in people's equity, meaning how much equity they have versus meaning, not versus in meaning. People have a heck of a lot of more equity today than they did 5 years ago, just based on the value of their house increasing. They're paying down the principal mortgage. A lot of people are taking that equity and paying off consolidation debt, things like that. I had an interview with one of my clients the other day. She had $30,000 in credit card debt. We went and kind of looked at all of the finances. They're at like 28, 30%, sometimes even 34.99% on credit card debt. Blows my mind. And if they continue to make those minimum payments on all those credit card debts, they're going to still owe that in the next 10 years. So what we did is we took that debt, we did a consolidation loan, we paid off all their debt, we freed up about $600 a month in payments. So now not only is all of their debt going to be included in their mortgage, they're going to be able to use that as a tax write-off because remember the amount of mortgage interest that you can write off is up to about $750,000 a year as far as the valuation. But now she has $600 a month in less credit card debt. Her credit score is going to jump probably 50 to 60 points. Revolving or credit card debt is the worst debt you can have because it's non-secured. It's revolving. The interest rates are higher. It's not tax deductible. It's bad debt. Good debt is putting it on your mortgage. Go ahead.
You took us down a rabbit hole, my friend.
I did.
So the key question is if the rate gets cut twice,
yes.
It's not going to immediately affect the interest rate for my mortgage loan that I'm trying to get, right? So should I just move forward with it? I'm married to the house. I'm not married to the rate. Is that what you loan daddies?
Yeah, marry the home, date the rate, all that fun stuff. Here's the deal. If the Feds lower the rate in September, like they're projected or likely to do, they're not going to do it twice. If they do it twice, it's not at the same time. Typically, you'll see 1/4 to 0.5% of a drop at one time. What that does is that lowers the Fed funds rate, doesn't affect mortgage rates directly. Mortgage rates are affected by what's called the mortgage-backed securities or the 10-year treasury. If you follow the 10-year treasury historically or inflation, that's typically where rates follow is the inflation. So a lot of people think when they're going to cut rates. Well, yes, but it doesn't directly impact mortgage interest rates immediately. I would say that it would take, there'll be a ripple effect. It would take probably about 30 days to 3 weeks, 3 weeks to 30 days roughly for mortgage rates to follow, assuming inflation also falls. So keep that in mind. It's not, when you hear the words that Feds cut the rates, doesn't mean, oh my God, mortgage rates are, 0.5% lower. Doesn't work that way. A lot of people think they do, but that is a myth buster.
All right. Next one I have for you.
Yeah,
I just got qualified for my loan for my house.
Great.
We're all locked in on my rate. I can still go out and get a new car that I want to, because I find out that my payment's low enough for my house that I haven't closed on yet.
Mhm.
I have enough money, monthly income, to have a brand new car. Is that true?
Depends. If you've got a really good mortgage lender, I know a guy, it's at Loan Daddy, that would be myself. They need to make sure they need to account for that. So you need to tell your lender, hey, I'm thinking of doing the following. When I meet with my clients, we go through everything and I tell them what not to do. You need to act like you're buying a $4, $5, $6, $7, $800,000 plus house. If you incur new debt from the time that you applied and purchased a home, right before we close escrow, what the lender does is does a credit refresh. So if you have $1,000, Cyber Beast car payment 2 days before we close escrow that we didn't know about, and then all of a sudden they do a credit refresh, that could whack your qualifications to mean that you no longer qualify. So sometimes that happens because when you're buying and spending money and you're buying a house, you have all these emotions and it's exciting and it's fun. I see it all the time where people get so excited that they go out and buy, oh, I got a new car, I got 0%. I don't give a crap. You want the house or do you want your car? Whenever you get pre-approved or pre-qualified, that means as long as nothing changes between the time that you are in contract until keys are in hand, everything should go smoothly. If you don't have a great lender and they're not watching out for you, they're not telling you, hey, don't buy anything, don't move money around, don't co-sign for anyone, don't go buy a second home when you're on vacation, don't get don't buy anything, don't do anything. Literally act like you're buying a house. Like I said.
All right, last one I got for you.
Okay,
I just closed on my house. I got my keys, and I'm now locked into my rate for 2 years, and the rate just dropped 1.5% over 2 years. I can't change my rate. Is that true?
No, you can. So here's the deal. There are no prepayment penalties out there. If there are, it's going to be on a hard money, you got jacked up credit, or you have a situation that you can't finance through the traditional route. The only loans that have prepayment penalties are those, I call them funky, or they're super hard money deals. Any traditional loan, FHA, a conventional, and jumbo, they do not have prepayment penalties. From the time that you close escrow, if let's just say 4, 5, 6 months goes by and the rates drop 0.5% or more, it may make sense for you to refinance. It also may not make sense, and I have this come up all the time. Jared, I'm 0.5% lower. Well, at the end of the day, there are what's called closing costs, okay? Lender fees, title and escrow fees. On a traditional, let's just say it's a $500,000 mortgage refinance, you have fixed costs, underwriting, processing, credit report, you have appraisal fees, and then on the title and escrow side, there are title and escrow fees, depending on the loan size, depending on the situation. $500,000 refinance, I would say somewhere around $3,500 for lender and title. I would say probably about $2,500. So does it make sense to throw $6,000 at a refinance to save $150 a month? Probably not. Now, if and when rates come back down sometime towards the end of this year or next year, and they're 0.75%, now you're saving $200 a month, $300 a month or more, then it may make sense because it's only going to take you a couple of years to recoup the cost. A lot of people are like, well, I'll just buy down my interest rate. How that works is this. Whenever you say, I want to pay points or discount fee to buy down the interest rate, you're prepaying the interest up front for a one-time fee up front for a low rate over the life of the loan. I'm telling all my customers, I don't want anybody throwing any money at anything right now because...
Thank you. Perfect.
You know what, Brandon? Thank you. Thank you for your questions.
Yeah.
What else you got? Let's get some more Mythbusters. What do we got?
Yeah. So Mythbuster, one of the ones that people ask is, hey, if I do this upgrade to my home, will I get all my money back, my return on investment, right? So the answer is no, not every time. Right. A kitchen remodel that you do to your home, yes, you'll get 90% of that money back. If you're just gonna change, if you have already vinyl windows, let's say you have Milgard vinyl windows in your house, and you don't like.
Shout out to Milgard. I mean, are we getting sponsored by them? We need to get some sponsors. Everybody, hey, whoever's listening, we need some sponsors. Listen, times are tight, rates are still high, people aren't spending money. We got inflation up there. Listen, if anybody wants to sponsor, give us a DM. We need, we're open. We're available. We're open for business. Anyway, sorry.
If you want to sponsor some of your building materials, direct message me, and we can put you on our specs, on our specifications, on our plan sets that we design, we develop in our team, and we'll make sure you use your product and get you shot out there. But I mentioned Milgard because we had this come up on a project that we're using. A client has existing Milgard windows, and they're white, and the new fad is bronze or dark windows on the exterior, and they want to replace all the windows in the house, and it doesn't make sense. They don't need to. They're not leaking. The R value's fine. They're not going to get any better R value. It's just about looks. And to save our client costs, we're like, hey, if it just looks, instead of paying $40,000, yes, you have to, the paint fades over time, 5 to 7 years, but you can paint them 3 or 4 times, and that's 20 years later. So, yeah.
A little cheaper.
Yeah, it just doesn't make sense. So we try to help people. If you do light landscaping, nothing crazy, you'll get a return on investment, 75%. Just remember, if you go crazy and do a super high-end renovation to your style and your taste, and maybe your taste is a little more vibrant, different colors like red or yellow tile or green or mossy, the new buyer, especially in California, they're $1 million homes, right? So the new buyer is probably going to change that. So they're not going to look at it as an upgrade. So your return on investment is probably not great.
So if you're going to do a major remodel, make sure you want to live there for 5, 10 plus years. If you don't think you will, don't put the money into your house to make it the way you like it. Think of it as an investment. Hey, I'm only going to be here 5 years. What's the look like going to be like in 5 years?
Yeah, so if you're going to do that, you're like, hey, it's a 5-year house. Let's do neutral colors for the cabinetry, the tile, the countertops, fixtures, doors, door hardware. A homeowner can always come in and change the floor and change the paint. Those are easy layups for people. The drapes. So if you keep it neutral, keep it consistent throughout the house, nothing crazy, you're gonna get your money back 100%.
Where do people waste the most money on a major home remodel? Where do you see you're like you don't need it? It's a want versus a need. What is that? What area?
Well, it's never a waste, Jared. It's always
depends. But, well, I mean, you can design and do whatever, but perfect example is the window situation. Like, I love you, Mr. and Mrs. Client. You really want to spend $40,000 on new windows when we can paint, and you're going to move from here in 5 years. That's not a cost-effective remodel, obviously. But again, it's up to the homeowner. But it's also up to us as professionals to say, hey, got it. I understand. I get it. How about, chocolate, vanilla, and strawberry? Don't forget about other things.
No, I agree. Yeah, I think the biggest, waste would be if you build like an exterior patio, like a whole outdoor pavilion, and you spend $500,000. We've had clients that we've done, $300,000 to $500,000 exterior backyards. Yeah.
Hold on. Did you just say pavilion? Tell me what that is. Like describe
a structure you can sit in that's open. All of those. You get a fire pit in there. It's enclosed on 2 sides, and it's open, right? It's a large space. It's bigger than like a patio cover. It's big. If you spend that much money, somebody is not going to see the value in that, right? They're gonna think, okay, this was like $100,000. Well, no, I spent $300,000. I got a pool. Well, some people don't want a pool. That's maintenance, right? They have little kids. That's dangerous.
Let's talk about pools. Pools is a big, people that have them like them. People that don't have them want them. How much is it to put a pool? I know, I understand the size and all the materials and all that fun stuff. In general, what does a pool cost?
You cannot even know that. You could go from a small $50,000 pool, 50.
What's a small pool?
$200,000 or $300,000 or more, right? Like Lucas Lagoons. Huh?
And what's the ROI on a pool? What's the ROI on a pool? What's the ROI on a pool? Return
Yeah,
on investment on a
I don't
pool
really
in
see it
general.
as a good investment. I feel like you lose about
Depends.
30 to 35% of your value. You have to find a find a
So
pool
if I put
buyer.
100
So
grand
that
in my
that narrows
pool,
down the fish in the sea, right? When you're selling your property. Some parents are
yep.
like, no, I don't want a pool. That's another risk for their child, their friend, right? You know,
Small
when you have a
children.
pool, you have different rules you have to follow. You have to make sure it's gated. There's an alarm. You know, you have different risks.
Yeah, there's a lot of risk with the pool, especially with kids, especially with maintenance. You've got increased costs. You've got maintenance and costs can just can be up there. That's an added expense. So when I'm a buyer and I'm like, ah, crap, now I got an extra 150, 250, 300 a month in expense because of the pool that the last homeowner just had to have. Again, pools are cool. It's like a buddy with the boat. I love that. I love that for me because I don't got to pay for it.
Yeah,
Break out
because
another
what is that?
thousand.
The boat
That's a
cost.
boat.
That everything's
You know,
$1,000. Everything's $1,000.
every time you turn
Yeah,
around, man, you go to the lake. Oh,
yeah.
$1,000.
Those are fish that you're
So
catching for
anyhow,
$1,000 a pop. So yeah,
yeah,
I think that's a big myth.
yeah.
Something I want to touch base on. I got some DMs. I put out a little ad that's saying that
It was me. I
yeah,
slid
you've been
into your
there for a
DMs.
while. I've tried to block you multiple times, just doesn't
Okay.
work.
Very
Yeah.
well, I just
So
opened up a new
I
burner account.
mentioned that first meeting you as a client, let's say you want a kitchen remodel, we have to do permits. So plans, permitting, and build is 90 days. Somebody's like, well, no, it only takes less than 30 days to do a kitchen. Absolutely correct. Okay, to do the build. But to draw the plans, right, and then submit them to this local municipality, and then get the actual permit, it takes about 60 days, right? So the actual construction, the
Yeah, but the
actually
actual work is
construction is only 3 weeks. You know, we can definitely get that
yeah.
done. By the time we do the plans and we send it to the city, then we're ordering materials already, right? We're not waiting till the permit gets out and then
Yep.
ordering materials. So just letting everybody know that, like, all the pushback of it, 90 days to do a kitchen. No, it's not. It's 90 days to do the process, right?
Yes.
So
Yeah. That's why you want to get with your contractor. That's why you want to call Brandon and his team, 831-238. I got you. Today's podcast could be and should be sponsored by Milgard Windows. We're going to drop a at Milgard when we post this. But yeah, so today we talked a lot about Mythbusters, what you can do, what you shouldn't do. Again, if you have questions, get on the phone, schedule an appointment with Brandon or myself. We'll have links in our posts where you can schedule a consultation, a strategy session. Listen, we don't mind picking up the phone and answering your questions and seeing what we can do to help. We're not going to be able to help everybody. You may have a situation come up that doesn't make sense for us, for you. We're here to make sure that you have the information so that you can make an informed decision, period. We'd love an opportunity to earn your business. So if you guys have questions, reach out to Brennan or myself, and we'd love an opportunity to show you what we can do. We've got years and years of experience, and we've helped thousands of clients over the last 20 plus years. So we appreciate you, Brandon.
no, I think we're good. Keep it short and sweet, and you guys have a great week. All right, take care.